Well, thank you for joining us today. I'm Marlin Bohling with you, your tour guide to the ag commodities. What a day it has been already, my goodness. Let's take a look at our corn market right now, and I'll remind you that we did have an overnight export sale of corn announced this morning. It was to Mexico, and 209,931 tons were reported sold overnight. Now, that is in addition to the weekly totals that we had that were actually very pathetic. We only had 265,300 tons sold last week. So the corn really struggling today. December down 6 1/4 at 658 1/4 here today. It's been kind of a risk-off day. You can really tell that by looking at the soybeans. Look at this, January down 24 at 1428. Wow, that's just a penny and a half from our low of the day. We are 31 cents off of our overnight high in that soybean trade. Crazy. In the wheat market in Chicago, you have December down 3.5 cents now at 803. You know, there for a little bit, it got way down to 795.5. Had a 7 handle on that December wheat in Chicago, but it's back up above $8 right now, at least by a couple of pennies. Now, on Kansas City wheat, you have December at 924.5. That's down 5.5 cents. In Minneapolis, you have that December spring wheat. Well, it's down 6 1/4. We're at 932 per bushel. Let's bring in Chris Swift and chat about everything driving these markets here. And there seems to be a lot driving the markets today, namely these outside markets. The CPI data this morning, that seemed to really take the spurs to the Dow. It also, I guess, really impacted the yields on the bonds or the 10-year notes. And we have a big deal going on in the outside trade. Let's look at the Dow right now. On the Dow Jones Industrial Average, on the futures trade, we have been sharply higher today. We're now 975 points higher at 33,502. And the dollar value on the dollar index down an amazing 2,290 points today. Chris, I can't remember seeing a day down like that in the dollar, and yet the grains can't seem to benefit from that. How come?
You know, it's interesting, Marlin. I'm not real sure, but the export data probably has a great deal to do with it. And if we saw the first of this week, we started trading lower to begin with. So that export data is very physical data towards the grains themselves. But then the outside markets with a lower dollar, lower interest rates now today, and a seemingly surge of money being put in, and all the energy's up. I have to believe that this might be a little bit of a support towards the grain markets now that they've sold off just a little bit.
Do you have a fear, though, that in the outside markets this is kind of a one-off thing, that maybe they're overdoing it today?
Well, I tell you what's really probably the most interesting is watching how the equities market moved this morning. In 1 minute, the S&P 500 moved 100 points. That's literally almost an impossible feat to accomplish unless either somebody already knew it was going to happen or they've got those computers set in a specific manner, because no human being would have had any time to react to something like that. So, you know, it's a big blow up. People, all they're doing right now is just picking up the pieces. They're not trying to build anything. They're just trying to pick up the pieces.
So with a move like this going on in grains, are farmers out there tending to just sit tight this week and not add to any sales?
I think so. I think that's the most interesting aspect of it. And I see we're down 6 cents on the day, but in reality, I would think if there were farmers selling, we'd be off 15 and 20 cents, something like that, that would say, hey, these farmers are getting really busy towards marketing some inventory. And I just don't see that. I just see this as a lack of buying for a couple of days in there. The market falls off, 17, 18 cents after it broke through that little support area there around the 680. So I kind of view it as an opportunity if we see it start to bottom here and start moving a little bit higher again with all the other outside markets, especially the energy markets and the grain and the currency markets. Those right there would be very supportive towards the grains.
But keep in mind, we are below the 200-day moving average in that December corn today, something to be aware of. Chris, we'll come back in a moment. We'll take a look at our livestock trade on a Thursday when we come back after this. Let's do some gear shifting here, and let's talk livestock with Chris Swift of Swift Trading in Nashville. All right, Chris, right off the top here, I wanted to ask you if you've heard of any additional cash cattle activity today. Did have some yesterday. Everything seemed to be steady with what we had a week ago. but I don't know if we're done for the week. Has there been enough volume yet?
I haven't seen anything so far this morning. I know that Texas and Kansas were bidding 150. We're having bid 150, so that was a little disappointing to the market yesterday. We kind of sold off a little bit in the fat cattle market. Today we're pretty much unchanged on everything, and I can kind of see why. This new information coming into the consumer with the CPI report and probably some of the market action there makes the consumer more uneasy than he does say, oh, well, now we are fixing to go into a recession, or we are going to be coming back into more inflationary, but neither one seems, possible right now with the way that the markets are moving. So I think that puts the consumer on edge just a little bit more, possibly making them want to contract more in their discretionary spending than to extend it.
Well, let me ask you this. I know you pay very close attention to the cattle industry. When do you normally see the peak for the wholesale buying of beef before the holiday period? And I guess the question applies on the pork side, too.
It's usually the second week before Thanksgiving. So we're probably pretty much wrapping it up. If you think about the slaughter pace, the last 3 weeks have been a slightly increased slaughter pace. I think you'll start to see that slow down a little bit. And I think that's why you saw those 150 bids come in yesterday, is because they, you know what, I just don't need as many cattle going forward. But what we do know is turkey prices are going to be a little bit higher, poultry prices a little bit higher. The consumer's not going to be finding much in the way of deals, and even the rib, we saw the boxes push back up to around 264, 265. So there's unfortunately just not going to be any real deals for the consumer in this holiday season.
So live cattle are mixed right now. December is up 70 at 152.27. Beyond that, everything narrowly mixed. Feeder cattle had some big gains early on. They're kind of cooling their jets now. January up $1 at 180.65, but it's $1 off of its earlier high. And on lean hogs, right now we have December 85 lower at 84.42. Thank you, Chris, for talking with us. Chris Swift of Swift Trading with a look at our livestock trade. Janet, back to you.